Alright guys, so in this video I'm going to be teaching you all how to trade universal models using SMTs, how to trade universal models within universal models and all that good stuff. So let's just get into it. Alright, so the way I'm going to be teaching is I'm just going to go over some examples and show you how it's done. Alright, so here we can see that the previous day expanded. So when this is the case, we look for a key level within the previous day on the lower time frame. But in this case, we see that there is no key level. It's just a swing high and then just previous day high, right? So when this is the case, market will create a key level and then it will manipulate that likely. And then it just trades to the opposing side, something like that. Let's see what happens. Alright, so here we can see that it's manipulating the current low of day, which is also the HL low. And it's doing it in London, right? So what is that? That is a sequential SMT. So it is very high probability. And in terms of universal models, this is just the third universal model, right? We got the manipulation of the range low on YM, which is the correlated asset. Now we simply target the range high on NQ since it is stronger, shown by the SMT. So this is our universal model on the 30-minute chart, right? Now we drop down to the lower time frame, 15-minute, 5-minute, 3-minute. See what we can find. There's going to be a universal model in here too, and we trade the same way as we would in a hard time frame. So here we see a gap on the 5-minute, right? It's just the RL to ERL universal model. We trade through these down close candles. That creates our order block. We can go long right there, targeting the range high, right? And here we even see a two-stage SMT, which hides the probability of the trade. A two-stage SMT is simply a second SMT created after the first SMT, right? If you demand this on all your trades, you're gonna have a great win rate. The key is that you just don't look for this in random areas, right? You look for it within universal models, and that is actually what is high probability. Alright, so we just hit this first objective. Now you want to look at your lower time frame and see what it's telling you, right? Are we failing to manipulate this high, or are we manipulating this high, which would just be a V-shaped signature? Here we are failing to manipulate, right? See this auto block? That's what tells us that. Now we just target the next high. Alright, so we see signs of reversal from this 30-minute swing high, right? Now we look at the lower time frame and it's just a range low to range high model, right? We manipulate the range low first without manipulating the range high on any asset, right? So this is a continuation signature, not a reversal signature. So we would be still looking for higher prices. And the way it would happen would be lower time frame universal models, right? 5-minute, 3-minute, it will be the same thing, right? As you can see, this is the 3-minute gap, and then we create the auto block on the 5-minute, right? We don't have a bulky downward scan on the 3-minute, but we have it on the 5-minute. You can take that, right, as our universal model. Here we even added another SMT with YM trading to the low while NQ did not, proving the strength in NQ, and that actually takes us to a target. Now we'll move on to the next day and see what we get. So here on the 4-hour we get a ERL to IRL universal model, right? We took at the high first, so we're going to target the gap. Now here we see that it traded to the gap already, like the nearest gap. So how would we trade to the even deeper gap, right? So the way you would do that would be a failure to manipulate the gap, right? How would you confirm that? Through a change in the state of delivery. So you see how we trade aggressively through those up close candles. That is what confirms the change in state of delivery, and we can look for the lower gap. So since we had a 4-hour universal model, which was the ERL to IRL, now we'll get universal models on the 30-minute, which will take us to that final draw. Here we see another universal model on a 30-minute, right around 9:30, right? This is very high probability. You want to be trading around drivers like 9:30, the red folder news events, right? They will be very fast in delivery, and that's what you want, right? You want your targets to be delivered as fast as possible. Here we see SMT with YM here, and that is just a universal model. Again, it's just a range high trading to the range low. And at the same time on the 30-minute, it's just a gap, right? We're trading away from a gap to the external draw on liquidity. Now this is for another video, but I'm gonna just say it here. When I say trade around that folder news events, I don't want you to trade around CPI or NFP. We get our 3-minute chain instant delivery right there, and we can take that lower. The original target is met right there, and if we get a failure to manipulate this low, then we can look for the next relevant low on the 30-minute. Now moving on to the next day. Here we see YM create an SMT with the current high of day in London, right? NQ fails to trade above the daily open while YM does, which is also a gap on the YM on the 4-hour chart, right? So you would want to trade this the same way on NQ as if NQ traded into the gap. So this would just be a IRL to ERL universal model. Now you drop down to a 15-minute, 30-minute. Here you'll see more universal models that take us to the relevant low on the 4-hour chart. Same exact thing as the previous example here, right? The market is traded into this 30-minute gap at 9:30, and then we just trade lower from there. After we trade to a 30-minute gap, we'll get more universal models on the 1-minute, 3-minute, and 5-minute, and that's where you want to trade the 30-minute universal model. And price will just keep going lower till it hits its final draw on liquidity, right? At the very least, it will be a 30-minute key level or a 30-minute relevant swing or something of that nature. Alright, that's all I have for you guys in this video. Let me know down below in the comments if you have any doubts. I'll definitely help you out. And we can go over some backtesting in the next video maybe. But yeah, that's all for this video. See ya.